Hey folks, welcome to another edition of Market Correction Analysis by InTheMoneyStocks.com for August 7th, 2007. What you guys are looking at here is the NASDAQ composite chart today, and that was pretty wacky. But before we get started on technical analysis for this chart and looking at a few other technical analysis charts, various stocks and indexes, I want to just have an announcement period here and go over a couple things. First off, I want to encourage everyone to join the intraday stock chat. I have a free trial that we're promoting, and TheMoneyStocks.com is promoting for August 13th. That's next Monday. Just email me at Gareth, G-A-R-E-T-H, at InTheMoneyStocks.com. That's G-A-R-E-T-H at InTheMoneyStocks.com, and I'll set you up, and you guys can join the intraday stock chat for Monday. Phenomenal product, and let me explain, guys, a little bit of what it is. The intraday stock chat is basically a forum for all day traders, swing traders, anyone who's is interested in the market to come in, share their ideas, and talk to real traders. All right, I'm in there. I lead the traders trading, but what we also do is not just for day traders, and I want to make this clear. For $199.95 a month, people can come in this room and talk about the markets with the traders in there. They can discuss stocks in particular, and we also go over technical analysis. A little bit of fundamental analysis, but you guys know I don't really believe in that stuff. The technicals really tell the truth here. But we also go over level 2 reading and a bunch of other things. So it's almost like a seminar for a month for $199.95 with the real traders, where you get to come in and out of the room at your leisure and discuss the markets. And if you're a day trader, then you get to trade and make money alongside with us. So it's a phenomenal product. So again, free trial August 13th. That's next Monday. Email me at Gareth@InTheMoneyStocks.com. I also want to do a shout out to our new subscribers. We have had a great inflow of new subscribers over the last week or so, based on a lot of our calls being so accurate, and we've been hitting these calls on the money for the last 2 months pretty much, leading all the way back to gold, oil, US dollar, 10-year yield, and now this market correction, which was called so accurately on our daily market report on our InTheMoneyStocks.com website. The other thing I want to point out is, I want to point out 2 stocks I mentioned on August 2nd. Alright, that's just a few days ago. It's August 7th, and we had a weekend there, so it's really just 2 days ago. The first one is TRMP, and I'm going to bring that up. Alright, we mentioned this stock, or I mentioned it as I was holding a small position, big deal, small position, and this was mentioned on August 2nd. Today, up 25%. Trump Entertainment Resorts, up 25%. Yes, thank you. The other one is SBEI. Okay, SBEI. And since that mention, it's up about 10% on August, since the August 2nd mention. So you guys see, these were mentioned in the video, by the way, on August 2nd. You can go look at these videos. At the very end of the video, they're mentioned, and the Trump was up 25%, and the SBEI, since we mentioned it, is up 10%. Alright, folks, go enjoy. You guys can join the Swing Trade Alerts on the website. That's where you get these calls. They might get mentioned on the videos, but it's not accurate info. It's just saying, it's mentioning. We give exact entries and exits, stops, stop losses, and target prices on our swing trade alerts for stocks like this. All right. And granted, we're not always going to get moves like 25%. That was a great move, but we do very well, and I'm sure you'll be very happy with it. All right, folks. Let's get right into the market here. And what you guys saw today is exactly what we discussed yesterday in the reports. And what was this? Well, we saw the FOMC coming out with their policy statement, the Fed coming out with their policy statement today, and we had discussed yesterday in the prior videos about what would be good and bad, and a lot of people were coming out in the media saying we need a lowering, we need the Fed to come out and give us a bone, throw us a bone. And yesterday in the video I said, guys, that's not the way to do it. If the Fed comes out and gives the market a bone, like by lowering rates or showing that there might be cracking, the markets will freak out, they will dump out, and it would be horrible. And again, the thinking process was this, and this is key, and I mentioned this in yesterday's video, so watch yesterday's if you want to confirm. But if the Fed lowers rates here, it's going to show that they are scared. They are literally freaking out, and they need to do action, and that's going to show that the economy is much weaker than everyone else is thinking right now, and the markets will tank on that. They will tank, all right? And that's exactly what I was concerned about, and why I said the Fed would not do anything. And the Fed would barely change any of their wording in their statement, because if they do, the markets would tank. And just like we thought, the Fed came out today at 2:15 and did not change anything. They changed a couple words in their statement, minor things. And again, we saw that initial sell-off. And we told everyone in the intraday stock chat, guys, we're going to rally. We're going to rally here, guys. Don't get scared here. This is just the initial reaction because they didn't lower rates by the amateurs. And sure enough, look at this move. We had a drop down right on the Fed, and then look at the rally up, guys. Huge rally up. We obviously came off our highs here, which some profit taking was taken right here, but we did exactly what we were talking about in the video yesterday. Okay, having said that, we want to discuss where the market's headed. Alright, we have an initial target on the SPX, alright, the S&P, of 1505 to 08. So we are going to push up a little more, but then we're going to sell off. We have another wave coming, guys, another down wave coming. Keep in mind, guys, everyone's preoccupied with the Fed right now, and things are not done. And I'm going to go to the daily chart here to show this big sell-off. This is basically wave 1 down, alright? And within that wave, we've had small bounces, ABC up, up, AB, so forth, patterns. But this is basically wave 1 down. We're getting a bounce back up here, and this is the daily chart, and I'm going to go into some technicals here. But we are going to have another move down, because with the preoccupation with the Fed over the last couple days, the markets kind of forgot about the credit issues. Everything that caused us to fall on Friday and panic is now gone, apparently. People don't remember it. Hey, things are great again. The Fed, looks good. The market was up the last couple days nicely. And I'm telling you here, guys, this is not over. So be careful. And again, what I want to also tell you guys is that in the chat room and into all our subscribers, we said yesterday, and even in the video I said yesterday, guys, we don't encourage you guys being long or short into the Fed, intraday moves especially, because of the whipsaw action. And look at this whipsaw action we had. Boom. This move took out all the longs, because everyone got freaked out that we were going to drop hard. So all the longs sold their positions right here. All right, all the weak hands, I should say. All right, and in tune, a lot of shorts jumped on the bandwagon here. And then we squeezed up, which made all the shorts cover, and a lot of longs take their position. Then we got up here, and all of a sudden we started to fall. So my point is here, guys, we alerted everyone yesterday, it's best to stay on the sideline in cash going into the Fed. And that's the truth, and that's exactly what was needed here. And we do have a push up in the SPX, as the SPX is lower than 1505 to 1508, and we do expect to push up there. But then the next wave of selling is going to come in, so be ready for that. Alright, guys, we're going to go to the daily chart here, and again, I want to show you this wave, but I want to show you, guys, a couple odds and ends. One is a couple trend tools here, and I'm going to draw a couple lines here, and I'm going to draw them sloppy, a little sloppy, but what you could see here is a move up in the NASDAQ chart to the touch of this line. And that could coincide, maybe a little pierce of this line, a little above it, and that could coincide with the SPX hitting the 1505 marker, alright? That's our initial wave there, push up, and then another fall. In addition, I want to show you guys a couple odds and ends here. I want to go to the weekly chart, and I want to show you guys this. Look at this. Right here on the NASDAQ, we're bumping up against the 20 moving average. That yellow line right here is the 20 moving average, and we're piercing it. We need to pierce that, and then that'll be the signal to sell off, all right? You're hitting resistance here. You need to push up through that, make a clear cut through that before you sell off. All right? In addition, you see the stochastics here. We sold off hard. We need this little bounce right up here to get us up before we can have our next wave down here for a fall, all right? And then that will go back to the lows, taking us lower in this market. All right? What you also see here is a huge move down in the chart on the weekly, and it's important to understand that weekly patterns, monthly patterns, the bigger the time frame, the better longer term analysis you get. When you look at the daily chart, you're only getting small, little moves up, little moves down over the couple days. If you want to see bigger picture moves, you got to look at the bigger time frames. So keep that in mind, guys. That's key. Bigger time frames will show you bigger moves. All right. In addition, what we have here, guys, I'm going to go to the monthly chart now, which is even more key. Monthly NASDAQ chart. I want to show you guys here. Look at this candle. This is last month, August candle, all right? And I don't want to block the candle, but I want to just point it out here. This is an extremely bearish signal. This candle is an extremely bearish signal, all right? And in the meantime, what you have is we were all the way up here, right? And we sold all the way back down in 1 month to close down there. All right, having done that, we pushed lower, and now we rallied up. You got to have a rally back up to push back before you can have another push down. Because, again, you guys know I'm a contrarian. When the market was down here at the end of the month, everyone was bearish. And when the market was down here, everyone was even more bearish. And you need to push up, all right? So you need to push up here so more bulls come back in the market. And that's exactly what's happening now over the past couple days. But, however, this is a huge bearish signal, and this bearish signal just doesn't get taken out to the upside. All right, folks? When you get a signal like that, the thing is not over. We're not going to fall. In addition, look at how long it's been since we've been to the 20 moving average. This whole stretch. And now let's look back. All right, how long since we touched the 20? Look at, this is longer, guys. All right, right here we touched. Right here we touched. So what I'm saying is the market always needs to come back to its 20 moving average, folks, and that's the way it's got to do. It's got to be, otherwise it gets too far and it's extended, and it always comes back, just like a magnet pulls something back. The other thing I want to point out here, guys, is a little chart analysis. This is going to be the next ring of support right here. When the market gets down to this line I just drew in, all right, we're going to come down, bounce off the 20, obviously. We have to touch the 20, but eventually we're going to this point right here, folks, and that'll be a strong support level. We break that and we're going to go down to the 50. But I have a feeling that by the time we get down to that point, the 50 will have 50 moving average here. We'll have moved up to this line, and this will be a strong level of support. See how the 50 is moving constantly up? Well, it's going to meet this line here, and I suspect it's going to meet it right with the market. All right, folks. Wonderful day. We'll talk to you tomorrow. Keep you posted. Take care.